Hello everyone and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I think we should have changed that intro because this week Curtis is having a week off. He's sunning himself somewhere in North Yorkshire, and I think he's picked a very, very good week for it, although he is missing the headlines in the industry this week as he's sunning himself somewhere there. But I have the pleasure this week of the returning, some of us classes as the Three Stooges, some of us as the Musketeers, whatever. I have the pleasure of being joined again by our friend of the podcast, David Bilsborough, who's the proprietor of Cheshire Cars. Good morning, David.
Good morning, guys. How are you?
Good, thank you. And the man of the industry, and who has sadly been off for a while, recovering after a hospital visit. I'll keep it there, Andy. But Andy Conde, head of auctioneers at Manheim. Good morning, Andy.
Good morning. Yeah, lovely to be back.
And hopefully you're on the recovery now. And I know you've been missing it. I think somebody described it as being like the fourth lockdown that you've been on.
It's been pretty tough, but yeah, let's put it behind us now and look forward.
Good. And plenty of nice weather to look forward to. And I don't think it's never a dull day in the industry anyway. So I'm sure you've been keeping a close eye on everything that's been happening.
Yeah, definitely.
So before we get going, there's a few headlines this week that will sort of position much of the conversation today. So we're going to chat to Andy and David around the retail and wholesale market, what it's been like over the last couple of months as we've come through April, May, and what we've seen so far in the month of June. Then we'll have joined again by our friend Stephen Whitton from Manheim, who will be talking a little bit more about mental wealth. And then the second half of the session, we'll start to talk about what we expect to see in that retail and wholesale market as we head through the second half of 2023. So to kick off with a couple of headlines, and we've got to give a bit of a shout out here that in Car Dealer, they've ran the story, and I did hear about this actually from my son, who tributes pouring for a car salesman killed in a tragic accident on the Las Vegas. And it was Chris Moran, who was sales director at findmy.car over in Ossett in Wakefield. And there is a bit of a shout out here because, one, it's an absolutely tragic accident that has happened over there whilst on a stag do over in Las Vegas. But his girlfriend and the family are urgently trying to raise money to bring his body back home to Britain. So there is a story there in the Car Dealer mag, and you can see there is a link there of where that if you can spare a bit of change, anything I think will help towards this to raise some funds to bring Chris's body back over to Britain. So do head over to Car Dealer if you can on that one. And just before we get into conversations with both Andy and David, which will lead some of the conversation anyway, in AM, they've ran the story that used values drop 0.9% in June so far as market returns to seasonal trends. And that's the latest from Cap HPI with Darren Martin there sharing some of his views on where he sees the market heading so far in the month of June. And as normal, we will be joined by Darren Martin again at the end of the month. He'll give you a full review of the month of June and his outlook as the months to come. VW in AM Online again, VW offering 0% finance on new EVs over this summer. And that's in conjunction with £1,000 deposit contribution. Now, the question this raises, and I'll speak to both David and Andy on this, is what will this do that again for that used vehicle volatility that we've been experiencing over the last 6 months for used EVs, when now consumers can walk into a new VW showroom and buy a brand new EV with 0% finance with a deposit contribution. So there's lots going on this week, and Car Dealer have ran various stories, and there's been a breaking one on Friday morning of this week from Mercedes boss saying that haggle-free new car sales is working. and it's what the dealers wanted. And Motorpoint have published their latest financials, and broker expects further losses at used car dealer Motorpoint, labelling firm overvalued. So some interesting stories again this week, but let's talk to Andy and David. So David, what is happening at the minute in the retail market? How are you finding buying cars, and how are you finding it in terms of being able to find customers for these cars at the minute?
Well, I have to report some good news on both of those fronts. We've been successfully buying pretty much what we need when we need it. So we obviously specialise in value, so we build the value into the product, and we don't distress market the vehicles at all. Because although we are finding them, it's not easy. We're having to put a lot of effort and work into it, and but we're finding them, and that's allowing us to, so far experience a decent year. So our financial year begins on the 1st of February. So the first 3 months, if you like, until the end of April was on par with last year, and a little bit down in May. But we're in the sort of a 12-month market, not a month-by-month market. So we look at the figures overall, compare. I'm quite optimistic for the year. I think we had a good start, better than I expected, given all the sort of noise around recessions and things. And I think if dealers build value into their offerings and can get hold of the stock, then I think that's probably most people will be saying, "Oh, we're having a decent 3 or 4 months so far." So we're not overly bothered, obviously, but we are not at the same time ignoring the noises in the market. And obviously, as you touched on, which we will do later, Motorpoint, there'll be a few others as well, I think, where they'll be posting perhaps lower profits, if any profits, after the last 2 years of what has been good trading conditions, hasn't it? I think now it's the time to, if you haven't already done so, really look at your offerings and start to build some value into them, really, rather than just focused on prices.
And Andy, I'm conscious that you've been off and you're back at it next week full on. But I know you very well, and I know that you can't stay away from what's happening in the sector and what's happening in the world of wholesale and auctions. At the minute, we've obviously come through April into May. We've seen May with 3 bank holidays, which has been a very unique month, alongside some very nice weather. And, we've got this point now where we've seen some product now starting to return as new vehicles start to recover in terms of supply. What are you seeing and what you're hearing, and what are your auctioneers telling you about what's happening at that front end with the auction world?
I think amazingly, it's been very consistent, and consistently not good, not bad, but you're sort of right in that middle ground. I've obviously, as you said, keep my finger on the pulse of everything that's been going on. And I've seen our conversions remain very steady. They've certainly not dropped. Anything between 60 and 70% is probably the norm. I've seen the cap prices. Funny enough, I was looking back this morning at where we've been on cap, and they've all been very consistent. Anything between sort of 92 up to 98% of clean. But those clean cars are still, making premium money. I know we had 3 bank holidays throughout May, but they didn't have the effect, or the adverse effect, I think a lot of us feared, because a lot of the auctions, they opened anyway on those days. And of course, in the new world of online buying, people don't have to attend anymore, and people are bored and they're there and they're buying cars. So I'm very optimistic of where we are now. I don't really see, and we talk about seasonal trends. Yes, there is a seasonal trend, but I think we've done really well so far to remain that consistency.
And you say, we pointed out at the start there with the latest from CAP HPI citing that the month so far, as of up to the sort of the 14th of the month of June, was down 0.9%. for June, and we've seen a little bit of movement downwards over the last couple of months. I think 1.2 and 1.5%, which is kind of within seasonal normality of depreciation. And every time we speak to Darren, we kind of really do try and call out. We've got to understand that the value's moved up in excess of 30%, and when you start to see slight movements down at 1 to 1.5%, it's not disastrous. It's not a cliff, and it's driven by some of the weaknesses that we've seen over recent months of the alternative fuel market, be it plug-ins or plug-in hybrids or battery electric vehicles. I mean, what are you feeling now around this return to some sort of seasonality, normality of movement of values?
I think what we have to remember is that we're now seeing we if we look back to the pandemic, where all those cars were the finance companies were saying to the people that got the cars, you can hang on to them, you keep them longer, that's fine. But we're now seeing the result of those, and some of the fleet companies are getting cars and we said it was going to happen. I can remember talking to you guys, over the period of time, and we spoke about this, that these cars would come back with more miles on in poorer condition, and that is what we're seeing now. And I think that is where the market is adjusting, and I think that's where we've seen the adjustment in cap, and I think we will see it even more. But from my point of view, I think the market is there. My only little concern is I think there's more cars about than we thought there would be. Definitely, didn't think there would be as many cars around, but the demand is still there. And while that demand's still there, I think we're going to be in a good place.
And David, in terms of that retail market, and we've seen over now, this will be, I think it's the third consecutive movement downwards, albeit only marginally downwards generally. Are you seeing any of this in that retail marketplace in terms of the price point of retail pricing and your ability to buy cars and retain margin?
When you introduced the show and you said about the 0.9% down, I made a few notes. And what I made was there's a market within a market. So we're not seeing that 0.9% or 1.5% decrease. On the stock that we're targeting to purchase for our business, we're seeing the opposite. The prices will remain very, very high. They're definitely not at the 3,000-4,000 into cap that they were last year, but they're at least 1,000 to 2,000 higher than cap. And I suppose, so that means, in my opinion, there's a market within a market. So the market of, shall we say, the cars that would go to the likes of Ford of Winsford, Motorpoint, etc., and a few others, maybe they are down 0.9 or 1.5%, the standard specification. But the vehicles with the added value, they're not down. They're still very much in demand and still very expensive if you just look at wholesale to actual SIV. So, there's a marketplace, obviously, for quality, and always has been, and hopefully always will be. And if you can target those cars and you're successful, you just have to hold your breath and go in and say, look, I'm going to target it, and my homework's right, it's worth X. I know I've got to sort of potentially give 1.5, 2,000 higher than cap, but we're consistently standing cars in between 500 and 1,500 over, and we're selling them. So there is still, a good market for them.
Does this sound familiar, Andy, about spec, condition, history, colour, everything's right, you'll pull the money?
I couldn't agree more with what David's saying. There's a market within a market, and for every 200 cars, for every 200 car sale, less than 10% will be, my old favourite word, isn't it? That little pipping, and that's it. And while they're there, they're going to make all the money. But as I said before, it's those, David commented on the run of the mill, but those poorer quality cars that's going to keep those cap prices reducing. But you have to look beyond that. You have to look beyond quality. And if people want quality, they're going to have to pay the bucks for it.
I mean, David, you referred to the latest story out of Motorpoint citing their performance, and without getting into the details heavily of the story itself. But, I think Motorpoint is a supermarket, rely heavily on volume, rely heavily on, throughput of vehicles. Historically, Motorpoint have operated in that very nearly new market, as we know, and they have diversified over the years and had to go into older, maybe caught a bit of a cold on some of the early EV adjustments. But do you think, the market is shifting now that, it is about, you've got to hold your nerve on margin. You can pull a margin in today's marketplace?
Sorry, I have to apologise. I had an incoming call that you were caught some of what you said. I think you were talking about Motorpoint. So I mean, obviously, I don't know their business. I've never worked in the business. I don't really know many people from the company. They've been successful for many, many years. They've grown, etc., expanded. So I can only comment on the headlines that we've all three of us have seen and read in the last few days. But when I do my retail back online, when I've targeted some vehicles to potentially, hopefully buy, Motorpoint are very much there with what they've got, and they're always, unfortunately, far cheaper. And I don't think there's a need. This is my personal thought, obviously, not a great need to be that much cheaper. So maybe that's an area that they probably will address. I'm sure they will going forwards. Certainly, the figures are quite stunning from the years before, where they were millions in profit. And I think that possibly isn't going to be the last that we hear about these supermarket larger operators struggling to post the profits that they were doing. And I think, I think it's some of the profits that we're posting, I'm sure, was some of the help that's going to be, we're going to see more and more of as we go through the year. I think we're going to be seeing more and more sort of smaller profits, break evens maybe. So I think in terms of how do they fix it, well, they're probably best placed to tell us that, and obviously, or to deal with that. But yeah, it's I'm not surprised, to be honest. I think there is a shift in the market, and obviously smaller operators can move quicker, they're nimble. But the big guys will come back again. They'll have a better day. I think they were commenting that it might be 24, 25 before they can get back into profit. So it's quite a serious challenge, but I'm sure they're more than capable of rising to the challenge as a company.
And thinking about EVs, and we can't get through a podcast without mentioning battery electric vehicles in some form or another. But Andy, last time you were on the podcast, and we speak on a regular basis around EVs in the wholesale market, education, holding your nerve, looking out for opportunities, and we at the VRA and others, we've been sort of shouting around this used vehicle market of battery electric vehicles, because there's a lot going on in new. And we covered the story at the start of today's show around VW coming out offering 0% finance on new EVs over this summer, and running a 0% campaign for its ID4, ID5 and the outgoing ID3 up until the 2nd of October. And with that, the offering the £1,000 deposit contribution. What do you think around, is this going to make it a little bit more challenging in that used vehicle market? Because suddenly, you can walk into a new car showroom. Why would you go and buy a used 2-year-old, 3-year-old battery electric vehicle when you can get 0% finance and some money towards your deposit new? How are you seeing this now? Because we've seen all the volatility since probably October of last year, and Darren cited on his last chat on the show that last month the Tesla 3 dropped at the start of the month, but then recovered higher by the end of the month because it suddenly became good value and a very good proposition for the retailers.
Some of the EVs are looking, I think they're looking tremendous value, used EVs, and we've certainly seen an uplift in both sales and prices over the past 2 months. No question about that. There's been a confidence there, and there's been a couple of retailers who have actually targeted them, and they see them as being good value. And when we sell them, we almost know who's going to buy them, because say there's a handful of people around the country who are just out there specifically buying EVs. Will it have an effect? It depends what sort of car you want to buy. If you want to buy a big family car, that a Tesla or something like that, I'm not sure whether it will. And I think for those people who are maybe want to test out the EV market, my view is I would still buy a used, because would I want to go buy a new? I don't think I would. I think as far as VW are concerned, I think they're very brave in what they're doing, and I understand it. It's going to try and stimulate the market. It may have a little effect, but you know what? Everyone in the motor trade, when something happens, we're always looking at an excuse as to what the reason is, and you know, this may be just another one of those excuses. But I think slowly. The EV market is just starting, that used EV market is just starting to creep back, and there's a bit more confidence out there.
Yeah. I think there's two markets in there. I think there's the ones that have got some of the early, that they've had a while, that they've paid good money for pre the drop, but they're actually going out in the market buying fresh product at the cheaper price to take the margin, to start to work through some of that more costly overage product that they've got, and kind of balance the way through the market at the minute.
Yeah, definitely. No, I agree with that. I agree.
And David, I mean, in your world of, you know, trading and retailing, what's your view now on EVs? Are you getting a little bit more confidence about it? You're still holding back a little bit with a bit of caution? What are people telling you, and what's your view if somebody does offer you an EV in the market?
Well, I from Dave's Shed podcast 3 weeks ago, I said to people, now's the time to dive in and buy an EV. I honestly believed it was. And what I've seen in the last 2 months, certainly, is for Tesla, for example, the prices have stabilized. They're basically making cap or plus into cap for the vehicles. So that's the Model Y and the Model 3. So that's good news, and I think Andy's absolutely right. I think now is the point where the market has sort of, I think, reached its level, and people are starting to target the market, as Andy said, quite rightly so. They're being optimistic rather than pessimistic. It's difficult, I suppose, if you have dived in at the middle to the end of last year, because that was the time, or the start of the beginning, wasn't it, of the end of the high prices for them. And they've significantly come down, haven't they? So we've got to be respectful that some retailers have found it very, very difficult. But yes, we're now looking at certain models. I think there's value in them, and I think it appears to be the future, but there is still a question mark over that. We're not going to touch on that today, I'm sure.
We haven't got time for that.
No, we haven't. But I still think there's a lot of our research and development needs to be done on the old chestnuts of battery life and disposal of batteries, making them more affordable, because we are going to see them, aren't we, where they are 6, 7, 8 years old, and the battery life won't be 279 miles. It will probably be less than 200. So there's challenges ahead, but that's not for today, is it? So no, I think the market, you know, for EV is there. Again, you've got to do your research as always, and just make sure you've got the best you can buy with the spec and the level of the battery, the size of the battery, etc. And if you're dealing in the city, you could probably buy a load of smart cars, couldn't you, with 60, 70 mile ranges? But if you're in the North Yorkshire or the regions, you can't, can you? You need.
I think it's clear. I think it is, again, know your market, go in with your eyes wide open. There is opportunities there. Be selective on it, but don't be dismissive. You know, there are good opportunities there, and as Andy said, some of them now are looking good value. Well, we'll take a quick break here, and we'll talk about what to expect for the remainder of this year.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up is our latest Men-Able moment, looking at mental health and well-being awareness, issues and best practices across the automotive sector, with me, Stephen Whitton. Yeah, hi everyone, it's Men-Able Moments time again. Hope you're well. Well, the sun's out and summer's arrived, so that should cheer everybody up just a tiny bit, if not a lot. So hope you're enjoying all the weather and getting out and doing all the stuff that you want to be doing and need to be doing and all of that. It's has been Men's Health Week this week. That's a week that's dedicated to really helping men to tackle all of those preventable illnesses that come about. That typically, as you know, I'm bound to shout about this, men really are not been conditioned or brought up to speak about. And we do tend to leave stuff to ourselves or keep it to ourselves, and as a result go and see doctors and stuff like that when things are a little bit too late. And I'm sure you don't have to look very far to hear stories of men in your lives that you know who've done that. So just a quick shout out to say at the back end of Men's Health Week, don't leave it, go and get stuff checked out. If you're not feeling great, if things aren't going well, or you're not happy that everything's working as it should, then please go and get checked out. Now, across the industry, I'm actually really buoyed up because I've been doing some stuff outside the industry recently, just a couple of little bits, and I don't think we're in a bad way. I think I've said it before, I think our industry is doing an awful lot. We've got a huge amount going on to improve the well-being and the mental wealth of everyone in our sector. It's still a very long way to go, and I'm still concerned that the messages that need to get to the people that need it aren't necessarily getting to them, so we probably need to do some work on that. But yeah, just keep thinking about mental wealth. What is it that's in the bank account mentally that's helping people to thrive and survive? And as the sun is out and everyone's feeling a little bit more cheerful because the weather's a bit nicer, these are good times to kind of home in on that, really. And as I've said before, people perform well when they're feeling good about themselves. So now's the time to be having these conversations. We launched Wellbeing Winners a couple of weeks ago. So again, thanks to Curtis and our fantastic sponsors at eBay Motors Group for helping us out with that. We're already now starting to get a number of inquiries, and one of the questions we ask when people come forward for an assessment is, well, why do you want to do this? What's attracted you to it? And by and large, the bulk of dealers that are coming to us are saying, well, they're already doing some stuff, but you could always improve and you can always get better. Now, that's really motivating for me because that makes me think, wow, there is a huge amount going on out there, and I know obviously from our members what they're doing and how much stuff is actually going on. But we still, as I say, have a job to do to get this message to the coalface, the ground floor, whatever you want to call it, to really help people to properly open up. And don't forget that at our core, Men-Able isn't just about men. We are one of the most inclusive organisations going, but our core sort of founding principle was about getting men to open up and start talking, reduce the stigma or remove the stigma, and also get rid of the silence that's around all of the issues that prevent us from being mentally wealthy. Us guys have not been conditioned or normalised or educated to do that, and I still hear examples of phrases like man up, grow a pair, big boys don't cry, and all of that being used. Well, quite frankly, if anyone's saying any of that, they need to grow up, because the world's moved on and things are slightly different, or very different now. And we're all aiming towards much more inclusivity, acceptance, and dare I say, and I know you're like this, Phil, a little bit of love. So, on that note, still keep doing all the great stuff to help the men around you particularly. And somebody said to me earlier this week, actually, it was a young lady who said, for women's sake, men need to start opening up and being honest about their mental health. And that, of course, starts the process of giving us all mental wealth. So, keep up the good work. Enjoy the weather. You know how to get hold of me, stephen.witten@menable.org. We'd love to have you on the Wellbeing Winners programme, excuse me, and get your business accredited and just give you that final little cherry on the cake to say, we really are a great employer. And like I said, trust me, we're doing really well. We're doing really well as a sector. But as someone said to me this week, there's always room for improvement. Have a great weekend, and we'll catch up again soon. Take care.
I don't know about you guys. I was trying to work out where he was.
He was at the airport, I think.
It sounded like he was at the airport or some bus station or something. I'm not quite a coach station. I'm not sure where it was.
He does a cracking job there, doesn't he?
I'll have to ask him. Yeah, he likes to share the love.
I'd be looking around the house, looking where the noise was coming from. I got a burst or something.
He had the birds the other week. He was tweeting in the background. And I mean, he does make some very good points there.
He does, yeah.
You know,
he does.
Say we've had men's mental health and mental health week. There's Cox Automotive have been doing some MOT sort of things for men's mental wealth and things like this. So there is a lot going on, and he's doing some fantastic work out there, and the message is starting to get out. So if you do need anything, then please, as Steve says, just get in touch with him. He's all over social media, particularly on LinkedIn. So do reach out to him, and he'll gladly pick the phone up to you and see where he can help and support in anything you need. So moving on, guys, we are now heading towards the end of June, which takes us to the end of the first half of 2023. Where has that gone? Anyway, you know, the book's starting to move down slightly in terms of used car values. Product is starting to ease back into the market. Luckily, not too quickly, too soon. You know, we talk about the registrations now, where there is this shift from private more into fleet business, which is that shift now from the OEMs opening those channels that were previously closed off for the last couple of years into that rental, fleet and business sector, which will start to, as you made the point earlier, Andy, start to defleet some of those contract extensions, a little bit older vehicles, a little bit higher mileage, whether that's off fleet or whether that's things like Motability. Where does the market look now in the short to medium term for the remainder of the year? I mean, Andy, go to you first on this in terms of, we talk about seasonality of used vehicle values. People are always asking, is there a cliff coming for used vehicle values? I don't believe there is. Not only as, there is a shortage of product in general, there's also a significant shortage, an ever-decreasing shortage of petrol diesel product, which people still do want. What's your view now, looking ahead?
Well, I'm with you. I don't think there's going to be a cliff. I think there's going to be probably a consolidation as we go through the summer months, as we always do. But you know what? And I'm probably saying this because of sort of personal feelings, but I think disposal routes are going to be absolutely vital for the people, the fleets and the finance and the dealerships. And I think the disposal routes have to be that of choice, where people can go along and buy physically, where they can see the vehicles. And I think we've seen that in Cox Automotive, and I know our friends in the industry work for our competitors who are also doing the choice of physical and online. I've seen increases in numbers. And I think as those poorer quality vehicles come back into the marketplace, I think that choice is going to be even more prevalent than it was before. So I think we talk about seasonality, and we all know what it is. We come into the summer months, the market dips, and then that second week in September, it takes off again. I wouldn't be surprised if we saw that again. We've not seen that for 3 or 4 years. I wouldn't be surprised if we see a slight dip now until we get to the end of August, early September, and then I think it's going to take off again. And that's the way I would see it.
And David, what's your view on that? I mean, you're looking every single day for opportunities. You've got people trying to sell you cars. You're out actively trying to buy cars. what's your view now through this, to Andy's point, through this summer period, holiday period, half terms, summer holidays, things like this, as we move through the second half of the year?
So I think the market is going to be it's more subdued than it's been over the last 2 or 3 years, but there is still going to be a very good market given the circumstances that we find the country in. So I think for us, we're still very optimistic to for the rest of the year, the 6 or 7 months, and I think there'll be a few headwinds, but I don't think that will affect personally too much to us here from what I've seen in the first 5 months so far. Stocks around. I think Andy's dead right. I think he's absolutely spot on. The quality vehicle will always find a buyer and will be in to book. And the ones that haven't been serviced or mis-servicing, etc., which is affecting us. And we look at so many cars, as you've said, and there's so many cars where the owner selling that car has declared not yet due a service and it's 3 years old. So I think people have forced themselves into a better spec car, more expensive. The monthly payments are higher. And I think it's just down to the fact that they haven't, the household budgets have been squeezed, haven't they? And they just haven't had the money, the spare money to service the cars, which is going to affect people like me because we just don't entertain them. So I think it's in everyone's interest to do the best they can with the cars that they have, the vehicles, and service and maintain them to a reasonable to good standard. Otherwise, you will be seeing a lower wholesale price for that vehicle. But I think overall, I think the market's going to be pretty decent. And I think what we have this year would have been a perfect storm. This would have been the pinnacle of the last 2 or 3 years of no production. But I think what's helping us is the fact that we are in a slowdown in the economy. There's no doubt about that. We can't say we're not because we definitely are. And that's allowed those cars not to find buyers at the same rate that they were finding them in 22 and 21. So in some ways, that's actually played into our hands a little bit, really, that there is availability of stock, not massively chunks of stock, but there is more. I'm quite surprised. I thought this year was going to be a terrible year, really hard work to get hold of the cars, but it's not been the case. And I think that's because there's been that slowdown and people have just themselves put the brakes on before they dive into the market. But if you build the value into your offering, you will find those buyers.
Yeah, and I think Andy mentioned it earlier, didn't he? That I think there's probably more cars coming back into the market than many may have expected. The production did ramp up a lot quicker. We saw a 6% increase in global production last year. I suspect this year we're probably going to see another 3% on top of that. So we're very quickly towards that 87 million production market. And notwithstanding, it's very much manufactured Pacific, but there's oversupply. There is suddenly immediate delivery lead times in certain areas are shortening, or if not, the immediately available product is there. So that starts to change the dynamics of the market a little bit now with product coming back in. I mean, just thinking of the listeners today, and I mean, Andy, what advice would you give listeners today coming in out of June into sort of July, August, September time to sort of, based on what you've been saying around EVs and profitability and availability of stock, what would be the key message that you would say to listeners this morning?
Don't be afraid to put your hand deeper in your pocket when you come to buy quality. That's number one. And number two, I think when you're buying anything else, it has to be backed up by any poor stock needs to be backed up with service histories and everything else that goes with it, and price them accordingly. That's the advice that I would give. And always remember that, when you buy a car, there's going to be a buyer and there's going to be that part exchange. So always remember, and particularly the auctions, are not necessarily the people that will dig you out of a deal. So that would be the sort of little bit of advice I give.
And David, what would your last bit of advice be to listeners this morning, similar to Andy, over the next sort of month or two as we move into the next few months?
I think there's a couple of pieces. You would expect nothing less, but I think the first piece would be to make business with your company easy to do for the consumer. So make sure you've got all the channels that you need, and maybe look at them and check them, and answer emails, inquiries quickly. It's all pretty standard stuff, I know. Make sure that you do pay attention to part exchanges, and you do make sure that the staff who are valuing those part exchanges are getting the right details and not frightened to ask people about the service history. Yeah, when someone tells them it has got service history, I think you need to go a little bit more into it and say, well, where is it and when was it last serviced, etc. Because it can unearth a lack of service history in the end, which if they can sort of part exchange something and not be, I thought it was service history. Well, oh yeah, it needs a service. Well, it's going to make a big difference. And the auctions, as Andy has said, won't always be able to help you out. So I think it's important you do the basics right and build value into what we're offering. So don't just think price is the only thing that's going to sell you that vehicle, because it definitely, most certainly is not. And that's where I think most people will be anyway. But those that aren't there need to get there quickly.
It's just reiterating, isn't it, that the things that people need to think about. So, I mean, that's it for this week. It's been an absolute pleasure as always. And I say, the headline, we'll share the news story on the LinkedIn newsletter on Monday morning as usual. So do check that out. Curtis hopefully will be back next weekend as usual to go through the week's headlines. And always do check out some of the stories and the media that we do cover, whether that's Car Dealer, Motor Trader, AM Online, Automotive News, Europe, etc. Always big headlines hitting on a daily and weekly rate. So do check those out. And just reminds me, thank you, Andy. Thank you, David. Thanks for joining me this morning on the podcast and sharing some of your thoughts and wisdom on what's happening. And I'm glad to know that you're back in action on Tuesday, Andy. It's, I'm sure you've missed it, and you'd be glad to be back on that rostrum and connecting with the retailers.
Absolutely. There won't be a lot hipping and hopping. More hopping and hipping.
Yeah, I can imagine. It's probably been a massive frustration for you, but it's, I'm pleased and glad you're on the recovery and you're back on your feet, needless to say. So fantastic. Well, thanks for joining us this week. It's been an absolute pleasure. And as always, you're welcome back on any time. We need to get Curtis to take a few more holidays and you can come back on more often. But that's it for this week, and thank you for listening.
You've been listening to Motor Trade Radio Podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.